So, how do you make money on Plus 500? Well, there are some rules to follow, but before you do that, you really need to trade on your demo account, and here's my demo account, for at least 2 weeks to get yourself consistent. It might take more, it might be 2 months. But the first thing you need to do is to actually lose money, because your demo account, if I look under menu here, to look at the account snapshot, your demo account is totally unrealistic unless you plan on having 100,000 to invest. So the first thing you need to do is drop this down to where you think your entry point is going to be, how much money you're going to risk. And I would recommend that the minimum is £300 or about $500. Although they'll let you trade with anything really, you can even start off with their little £20 $50 gift or whatever it is. Now, a word of caution: if you build up your account entirely from that $20 they gave you, do you think you're going to be able to get your money out? Possibly not. A lot of people have had problems getting money out of Plus 500. I never have, because I obey the rules, and the rules are basically that you should deposit some money. That's a pretty obvious one. And the next one is that you shouldn't scalp. And what do I mean by scalping? Well, if they see loads of trades in your account with like a profit of 1 or 0 or 2, then they're going to regard you as a scalper, someone who actually takes lots of tiny amounts of profit many times a day, which is quite easy and is against their rules, believe it or not. It doesn't matter if you have 1 or 2 of these, but if your account is full of these, you know, $5, $10 or £5 or £10 profits being taken all the time, and you're trading 10-20 times a day, then I'm afraid you're not going to be able to withdraw your money. Now, withdrawing money takes some time. And the reason for this, especially the first time you withdraw money, is that Plus 500 have to jump through some hoops which are generated by the regulators and not a part of Plus 500 at all. These are things they have to do. Every broker has to do them. First of all, they have to get an actual stockbroker of their own to review your trades to determine whether or not you've been scalping and whether or not you've had inside information. So if you're planning on trading in the company shares of the company that you work for, don't do it. And they also need to run it through a technical service to make sure you haven't actually hacked their software and you've managed to do something mysterious and generate profits you shouldn't have generated. And this all takes time, so you can expect it to take 2 or 3 days before they will release the funds, and it will then take however long it takes to get to your bank account or PayPal account, however you decided to withdraw the money. So don't expect an instant withdrawal. And there's been a lot of people who say that Plus 500 is a scam. Well, it's not. There's a lot of people on here that actually generate an awful lot of money. So, as I said, the first thing you need to do is lose money, and this is quite easy. You look for a really volatile instrument, and good ones are silver, for example, and where else? You got one called volatility, which is VXX. If I search for that, there we go. That's a good one to lose money on. And as you can see, it's going down at the moment, so we're going to bet it's going to go up. Okay, so we're going to buy. You buy to bet it's going to go up, you short to bet it's going to go down. So we're going to buy. And what we're going to buy is we're going to buy a huge amount. Now, never trade with the full value of your account. And so even when you're doing this, because you can get stopped out and reduce the account to 0, which is not what we want to do. We want to actually reduce our account down to whatever our level is going to be. And as you can see up here, we've got our buy order in, the rates there, and that's where you do. And this is actually an order we've put in, because this isn't, so I'm going to cancel that, because VXX, I didn't notice, isn't actually live at the moment. So what I want to do is I want to find something that's live, which will be something in the UK stock market that's doing crap. I haven't really got time in this video to look for it, but you get the idea. And you want to lose money until your account gets down to the level at which you plan to enter in. If you're putting £1,000 in, reduce it to £1,000, and then you can start practicing trading. Now, how should you practice trading? Well, exactly the same way as you would do. You can use a stock scanner if you like to find stocks that fulfill your particular things. You can use the risers and fallers, although I wouldn't recommend it. They always tend to be already risen or already fallen. So if we look at this one, you can see where we are. Now with charts, I recommend you use the candlestick option, which is over here, and you can find a lot of stuff online about how to interpret candlesticks, and there's not a lot of trading on there at the moment, so we'll forget that. We'll go for Ethereum, and you can see here that this is a reasonably volatile stock, and it's risen. When did it rise? On the 20th, and now it's on a slow decline. So you wouldn't want to bet that you'd want to buy it, so you'd want to short it. And when you short things or buy things, as I said, you want to use about half the money you've got available, and there's a reason for that, which I'll go into at the moment. So if you've got 300 in there, you want this figure here to be 60. Sorry, 150. So that's the minimum it's going to let me buy, which gives you some idea. So you want this figure here, which is the amount of money that you're actually putting in there, to be half of your actual value to trade. So if I had, say, $600 to trade, this would be absolutely fine. So I'm going to short that, and it'll come up in a moment. There you go. Now the next thing to do is to have a look at this edit here. Now you can see here you can set two stops. You can close at a profit, you can close at a loss. Now always put a loss in, and usually, unless you're trading with huge amounts, you want to set it at the lowest loss you can actually get away with, something like that. So update that, and bang, there we go. Now if you're going away from here, which I wouldn't recommend that you actually do, especially in the first days, you want to sit on top of your stock. You want to watch them, see what's happening, because you might decide, oh, it's not going to go down, it's going to go up a lot, in which case you might want to act before that figure there gets too low, and close it out even before your stop loss. Your stop loss is there as a safety net. If it drops like a stone, the computer will react faster than you can and close you down. So that's the first thing. Now if we go back to this edit screen here, you can see that we've also got close at profit, and you can pull that down as well if you want to. You can raise it and you'll see it will show you on the graph where your profit and loss lines are. So I'll update that. And that's the basics of how you trade. Now, if you see it going up a lot, you might want to, going down a lot, in this case we're shorting it, you might want to drop this figure down. And likewise, if it was the other way around, you want to increase it. But these are there for if you have to leave the computer and there's a pricing action, then your stops will take care of the trade for you. Now, the reason I said it is very important, that you actually have only traded part of your stock is that here you've got this required margin, and that can go up and down as your position changes. And sometimes, let's say you set your close at loss too far away, then you'll find out what happens is that although you haven't hit your close at loss, because you haven't got enough money in your account to cover the margin, then plus 500 will close it for you. And this has happened to me a number of times. It happened to me on the silver market the other day when I was betting that it was going to drop, as I am at the moment, and all of a sudden there was a big spike. And as it happened, I was right, the silver market did drop, but this big spike actually took me over my margin and it closed the trade for me, and I made a thumping great loss. So that's not something you want to do. So the first rule is to only trade with half of the money that's in your account. Don't be tempted to bung all or nearly all of it on some stock. And the next rule is, what do you look for as a profit? Well, you want to try pulling out at break even, obviously, when your figure goes to zero. When this figure goes to zero, you want to try and avoid that. And so your profit needs to be a decent amount, and I would suggest that you look at a minimum level of profit when you pull out as being around 5% of what you put on. So if you put on 100, then take profit at 5, unless you think it's really going to go up, in which case wait until you see the first little signs of a reversal, and then close your position. And this is, closing positions is simple. You just hit close position when it will allow you to do it. It's not allowing me to do it at the moment because there's a lot of movement, and that once again is not anything to do with plus 500. This is a stock exchange thing where they have these things called breakers, where if there's too much movement on a particular stock, they actually stop trading on that particular stock. So yeah, so we'll close that. And as you can see, my profit and loss isn't too good at the moment because it has actually risen. But if you look at here, you've got this noise level, so you've got to expect your profit and loss to go up and down because of this noise level. And if you look on the 1 minute, the noise level will look even bigger. And as you see, I went into the trade somewhere around about here, and it's gone up, not down, but the overall trade is down. And this is what you might call a long-term trade. I would expect to see a profit on here by perhaps the end of the day, not in 5 or 10 minutes. And there are other things such as silver, which is the reason that I quite like it. There we go, silver. There are other things where the swings are much greater. The potential losses and gains are also much greater. And you can look sideways and you can see it's been going up and down quite a bit, and going up and down quite a bit just this morning. So this is quite interesting at the moment because it looks like it's going to rise. So let's buy some silver, and we don't want 180,000 ounces. I'm going to buy the minimum amount, which is 2,000 ounces, which would mean that I have to throw 174 into the deal, which if I had about 300 would be about right. I'm going to close at loss. Now there's a guaranteed stop there, and if you're going away from your machine for an awful long time, you want to make absolutely sure it never ever goes below your stop loss, then you put that guaranteed stop in, and you can only ever have that one close at loss. You can't change it, because quite often as the profit goes up, in this case the silver goes up, you would want to, sorry about that, you would want to reduce so that your close at loss here might even be when you're in profit. If silver goes up to there, then you don't want it to drop all the way down here again and you lose all your money, so you would change your close at loss. So I wouldn't recommend using the guaranteed stop unless you're doing what you call swing trading, which is leaving the investment in there for several days, which you might have to do if you've got a day job. And we've got close on profit there, and I'm going to take that down to the minimum and buy. Now that's taken me an awful long time to do that, and in that time that's moved up and it's leveled out again, so it's not such an attractive trade as it must be, but there we go, that's life. So as you can see, at the moment I'm £24 loss, and with silver that can change dramatically. Down to here might be 80 quid loss, up to here might be 60 quid win. But keep your percentages low, because remember you're compounding. As your account grows, each time you invest you can raise the amount that you invest by, and this means that you're on the right end of some compound interest. And it's quite interesting if you work it out, and I will go and work it out now for you, and you can use a compound interest calculator. Here's a good one. And so it doesn't matter whether it's dollars or pounds or what, it doesn't matter because the figures will work out the same. So let's say you've invested your £300. Instead of years to go, we're going to say weeks, so 52 weeks. Let's say you're absolute rubbish, but you're good enough to avoid losing everything. So let's say you make 5% every week. Then by the end of the year you'll have turned that into 3,982. But if you're a good trader and you've managed to do 20%, no, say 15% per week, okay? So let's say all of your trades you've made 1 or 2% on each one, you've compounded it up, and it ends at the end of the week you've made 15%. Oops, that 300 has turned into 494,000, and that shows you what the key is to this. The key is being consistent. Now I would say when your account gets to a certain level, when it gets to several thousand, it's time to reduce the amount that you're putting on each trade and make multiple trades. There are a lot of videos on there about trading on YouTube, and what I would recommend is, if you can't find a trade, an obvious trade, then don't trade at all. So it's better to keep the money in your account than lose it all, right? You may get itchy fingers, but don't do it. And now for the disclaimer. This is how you can make some money with plus 500, but remember that you can also lose it all, especially if you don't have a stop set. So remember that, and I hope you've enjoyed this, and subscribe, like, all those good things. And how are we doing so far? Let's have a look. Let's have a look at open positions. I've got 2 open positions. I've got one that I'm losing, which isn't a surprise because that was the actual game. The other one, I'm about the same level as I was. It's just starting to go up now. As you see, it's starting to go up, and I'd expect that to keep going up really for quite some time. Let's have a look at the average sort of length here, where we got one of these dips. From there to the top is about an hour, so I'd expect from here where we entered it for it to be about an hour's time when I'd be looking at money. But I wouldn't go away from this. If this was my trading and I was trading real cash, I'd sit here and watch it. I'd at least look at the screen every minute or two. So, thank you very much.
Sometimes feel like you're living in North Korea, crushed by continuous mainstream propaganda? Click the subscribe button. Subscribe to Arduinotronic to get the antidote now. It's free. Don't forget to like, share, and leave us your comments as well.